All right. We are live on LinkedIn and YouTube today with my friend and colleague, Blake Christian with HCVT, one of the OG Oziers.
Yeah.
Blake, I remember, literally back in 2018 at the Opportunity Zone Expo, talking with you after a presentation. We were talking about operating businesses and how this is going to be such a boondoggle for operating businesses. And we've seen a little bit of that, but it's certainly been a ride since then, hasn't it?
Yeah, it's been a good ride, busy ride, and actually with Oz 2.0 coming online, I thought it was going to go dead for a while, but we're busier than we've ever been. But yeah,
Yeah,
I'm disappointed there's not more operating businesses in these, but hopefully round two, because they're powerful for operating businesses.
yeah, I think so. And I actually think that we're going to see a big utilization of this rural play, which, by the way, right, we got the notice out from the IRS today that basically confirmed what the designation of rural was, and that also designated and it specifically laid out the OZ 1.0 census tracts that have that meet that rural designation. Now, they did it for purposes of the 50% substantial improvement as opposed to the 100%, but we now know which 1.0 zones are going to be eligible as rural, beginning January 1st, 2027, which is, I think that's actually really exciting, because then folks will be able to do, deals in those zones and get that 30%, rural qualified opportunity fund status. Was there anything that kind of shocked you from that IRS notice? Anything to add on that?
No, but I do. I'm very excited about the rural. What we've been talking about internally is, my concern is that governors are going to be more inclined to want to name, and since there's not a mandatory percentage that they have to name that was in the House bill, but the final bill, they're not stuck with a minimum percentage that they have to list as rural. But my concern is that if I'm a governor, I'm going to probably pick urban areas because it's going to have more employment impact and things. But I think, again, agricultural projects, infrastructure projects, all those types of things, I think we're going to see some really interesting rural projects. It'll be interesting to see that roll out. And a 30% haircut and a 50% improvement requirement is a big game changer.
Yeah, it really is. So when I first started doing these, I got plugged in with a woman, she's a professor at UNC Chapel Hill in their business school, and I think she doubles in their government school as well. And her name's Jeannie Bonds, and Jeannie was working with the Keenan Foundation to specifically, work around, how you can integrate OZs with other types of, governmental funding type vehicles out there, specifically in order to try and accommodate some of the silver tsunami that's adversely affecting our rural areas. And particularly, in some of the trade type industries and some of those kind of mom and pop businesses that are out there that may or may not be able to attract, kind of younger talent, and that may not have kind of that off ramp into, selling to private equity, that kind of thing, because they are in a rural area. I think it's going to be exciting now to see that type of activity going back again, because we now have permanence where it'll make sense for people to actually allocate and really get to know this, and then maybe even be able to pull in some of that USDA stuff, right? So community development block grants, developing community centers, that kind of thing, that could kind of be a hub for OZs. Are you hearing any chatter about that?
Well, we're working on a couple of projects right now and twinning new markets tax credits, which is nice because, obviously Oz is a, it's all focused on the equity part of the capital stack, whereas now, you get credits for the debt part of the capital stack. And those work really well. They're often rural areas, the new markets tax credit. So yeah, I think you're right. We're going to see a lot of grants and other government programs, federal and state, kind of blended in together on some of these rural laws projects. So again, very fertile ground in
So,
2027.
I highly doubt that President Trump's going to be, watching our live or maybe the replay of this, but I don't know, maybe Scott Turner, right? And,
Yeah.
I love listening. So number one, I love listening to Scott Turner talk. His presentations are absolutely amazing. And when he was head of the White House Office of Revitalization Council that effectively spearheaded opportunity zones and kind of bringing all of the government things to bear around opportunity zones, it was amazing to see how much momentum that got for the opportunity zone program. And I'd love to see the White House, refresh that, get it back going. Let's get an OZZAR back in the house.
Yeah, Scott could be an actor when he gives up his government position. He's got a good voice, and he's so passionate.
He really is. Yes, he really is. And evangelical within his,
Yes.
right? Like relative to just how he talks and how he presents about opportunity zones. And I know that they're doing a bunch of that stuff inside of HUD. I'd love to see, another kind of foray like they had the last time where they specifically mandated, hey, listen, every cabinet member needs to figure out a way to make opportunity zones, a special dispensation, whether preference points, that kind of thing. And then they have a kind of a centralized clearinghouse that kind of brings all those things to bear. So
maybe we'll see that in 2026 once they all get the new census tracts get designated. Maybe we will see them do some regional road shows.
Yeah, that'd be great. In the meantime, I love the the webinar that EIG did last week about how folks can get involved inside of affecting their, getting their, census tracts designated, being involved with the governor's office relative to, weighing in on that kind of thing. But to your point, I do think that we need to make sure that the governors are designating rural zones so that way we've got good zones that can receive this, the 30% and then the 50% benefit.
Absolutely.
So, all right. So we're here to talk today, and granted that just came out today, which is what, obviously a focal point for me. I'm sure that it's been, it was, so every Tuesday we have our OZ Ascent, which is effectively our mastermind where we go over compliance issues. And we usually have about 40 people that attend that out of the roughly 150 members that are inside of that mastermind. And this has obviously been a big topic, and we did not actually know. I didn't have the that directive out when we wrapped that up today. But since then, people have been lighting me up saying, hey, listen, what's going on with this, that kind of thing. And I think my biggest takeaway from it is, hey, these are the zones that are going to be rural in, starting January 1st, 2027, which is exciting. And then if you're in a project right now, I think that it starts next year when you get the 50%, correct? Or does that start right now?
I did not think that was going to go into effect till 2027, but you may be right. I know that the additional reporting goes into effect, I think, for 2025 reporting year, but you may be right that the 50% goes into effect now. I'm not positive.
I don't know that it's now, but I think that it is January 1st of 2026. I don't know where I got that date from, but we do need to look at that. So you think that the additional 30% goes into effect for 2025 on the rural?
No.
That's not until 2027, correct?
Yes. Yeah.
Okay.
Oz 2.0 for sure on that.
Yeah. Okay, great. Well, anyhow, gives people lots of kind of runway time to be looking at the existing zones that are designated under 1.0, where there'll be that 2-year overlap where people can do 2.0 deals with the, the 5-year deferral and the 10% or the 30% if they're in a rural area, in those zones that were designated back in 2018. I'm going to ask you this too, right? Because there's kind of a disparity of opinion on this piece too, relative to the 30-month substantial improvement window. So they specifically called that out in the revenue notice that they sent out today. And I actually called the IRS to see if I could get a hold of them to get their take on this. And surprised I didn't get a hold of anybody. We'll see if they call me back. But when do you think the 30-month substantial improvement window starts?
For 2.0 or
no, for 1.0, for anything,
Well, what point? I mean, the regulations I think are relatively clear that it's, it's not when you buy the property, but when you have made some movement, substantial movement towards improving the property. So Thank you
very much. So, right. So we got two experts on here that agree that it's during, just like the regulations say, in clear black and white, during any 30-month window.
Yes.
Right?
Oh yeah, absolutely.
Beginning with on the date that it was purchased. Not if they wanted it to say during the 30-month window beginning on the date that it was purchased, they would have said that. They would have changed it from any to the. And so I am a firm, staunch supporter that you can choose to have your 30-month substantial improvement window begin when you start to do substantial improvement and start to spend substantial money on it. Man, I know we're like going off crazy off of what we were to talk about on these extensions, but these are things that have continued to pop up in my Ascent calls. And, there's a little bit of, there's some other stuff out there that's floating around that's getting picked up in AI searches because people are putting blog posts out about this. And I'm like, no, that is not correct. It's any 30-month. Literally, the language in the regulations state it. So I'm glad that we're in agreement there.
Yeah, I mean, it'd be totally contrary to the intent. It would be a hindrance to be able to rehab a building or build a building if you had to start that 30-month with all the especially when you're in an urban area. It might be 2 years to get all of your zoning and plan check done. So it would be ridiculous to start the clock the day you buy the property.
All right. Well, we got some input on this right now. We got David Silliman who weighs in. What's going on, David? Glad you're here today. And he said that the 50% is in effect now. So
wow, that's
on
huge.
the rural, which is good to know. Thanks for the input on that. Going back to this, any 30-month period, by very definition, if they meant for it to start on the day that you purchased it, then why would you have working capital safe harbors, right?
Right.
You wouldn't need 31 months as a working capital safe harbor because you'd have to get your substantial improvement done inside of a 30-month window.
Right.
And then you certainly wouldn't need the second one, right? And so anyhow, I just think that from the plain language itself and then those two things added in there, I think that we're looking at any 30-month window. All right. So anything else? Any other comments before we hit into the extensions, Blake? Anything top of mind for you? Kind of the things that are bouncing around in the skull of Blake Christian relative to OZs that we need to know about?
So, I mean, kind of stuff that I talk about every day is number one, you should be advising your clients if they're holding appreciated assets individually, they should move that into a partnership if there's any chance they're going to sell that in the near future. And why you would do that is if you could sell an asset out of a partnership as early as January 1st, 2026, and be able to roll that in 2027 into Oz 2.0. Whereas if you held it individually and sold it on January 1st, 20 or 2nd, the first business day of the year, you you wouldn't be able to roll it in because you'd be beyond the 180-day rule. So that's number one, to kind of think, how can I get into Oz 2.0? And then, there was a few weeks ago, there was some rumors going around that, oh, you couldn't, you had to have a 2027 gain or later to participate in Oz 2.0. And that got, quashed, that rumor. So unless
I don't think there's any question that, right? Like, it's just that you would roll it into a fund after January 1st, 2027. But that's, it's funny because, and I need to talk with you, and we need to have this on be like a regular occurrence, because I love it. You always have, right, some kind of creative hack just like that, right? Like, hey, if you've got a single asset, just roll it into a partnership right now. It's really not going to, other than having to file another partnership tax return, which that kind of stinks. But if this gives you the flexibility to be able to get that really long, to go back in time, which is exactly what we're going to talk about right now. And so walk me through, and I guess maybe you had some clients that had this issue, that kind of what brought this onto your screen relative to the delays and that kind of thing with respect to the timing.
Actually, before, can we just close off just, kind of current thinking? And one other thing on the trying to get into Oz 2.0, and again, it's beyond the scope of this conversation today. But if anybody is thinking about, maybe they're being forced to sell an appreciated asset by calendar year end, but they're, frustrated they can't get into Oz 2.0. We've got a plan to use a fiscal year partnership and leapfrog into Oz 2.0. Again, we won't go into the details, but they can contact you or me, and we can help them still get Oz 2.0, even if they sold something towards year end here.
Yeah, I mean, one of the things that I keep talking to people about is that, it's great to have the 5-year deferral, and it's great to have the 10% reduction. But one of the benefits of 1.0 is that you still have the ability to be able to get your money in right now, and then to potentially be able to discount substantially the value of your investment as of December 31st, 2026. And in a lot of cases, particularly if you've got construction involved, that, you could be looking at a 50% discount potentially. And so I don't know, I really like that strategy as well. And, is the counter to that, right? Where people are like, man, I'm really set. I don't have any choice about my timing on when I can sell this. I'm dead set on wanting to go into 2.0. I'm like, well, tap the brakes a little bit, because you may want to really look at it, depending on what you're wanting to invest in, of course. But there could be a play for you to get a substantial discount on what you're going to pay in taxes. Number one, it's going to we know what the tax rate's going to be for December 31st, 2026. Number two, well, I mean, stranger things have happened, but realistically, are they going to get an increase in capital gains between now and then? Probably not. And so, you know what the capital gains rate's going to be, which is really low right now. And you then get to take a substantial discount on top of that. So I don't know. I'm a fan of going ahead and getting your fund going, getting your 10-year clock going right now, because when was the best time to have planted a tree? 30 years ago. When's the second best time? Right now. When was the best time to have started a fund? 2018. When's the second best time? Right now. And so I know people are waiting, but man, I'm all about getting the clock started.
No, you're preaching to the choir. And I've got 4 projects right now that will be mid-construction on December 31st, 2026. So what kind of discount can you get on that? 30+%. Plus, if you're a minority owner, you're going to get another 35% for lack of marketability and lack of control. So
now, is that a combined? Is it 35% for both of those, or is it 35% each?
No, it's combined. 30 to 35%. Usually, the IRS is not going to fight you too much on that. But you're going to have to get an independent appraisal, and our appraisal department is all all over this.
That's
So.
awesome. Well, one of the things that I will say, and this is for everybody that's either watching live or that's watching the replay of this, is that if you're planning on doing a discount, you need to be in touch with whoever you're going to have to do your appraisal right now. You need to be getting in queue because people are going to be inundated in, I would probably say, Q3 of next year relative to doing OZ deals. And if you want to get your stuff done, go ahead and get in queue now. Start working on the backdrop. Start working on the other things to get that to your valuation person so they can put together the base and then they can finalize it as of December 31st. But, somebody that calls me like usual, right? They're going to call on December 15th and be like, hey, can I get a valuation discount? And I'm like, yeah, right. Get in line. So get in line now, start early. And it all goes into timing, which brings us back around to what we originally, did this for, and why we are going on live right now is to talk about some of these extensions out there for various disaster relief and other extensions that the IRS offered. So I'm going to bring your slides onto stage. And, this significantly impacts timelines, particularly for those partnership and S Corp returns. So walk us through this. I'm assuming you want me to go to the next slide here.
Yes, please. Thank you.
Right, there we go.
Yeah. So Ashley has this PowerPoint, and I'm sure we'll distribute it. And this has hot links in here where you can read in detail what I'm going to talk about. So, and I'm going to start with what's near and dear because, I still do a lot of work in California. We had the Pacific Palisades wildfires at the beginning of the year that destroyed, 10,000 structures. It was pretty severe. On, let's see, January 10th, the IRS provided an information release 2025-10, and basically they didn't just extend the filing date. They said that they just moved the filing date, which is critical. So October 15th of 2025 became April 15th, normally. So that was critical to the Oz world. And I can't claim that I came up with this. One of my partners asked me, hey, is there any extension on Oz? And we started digging into it. And it's 180 days from, if it's a K-1 game in 2024, now instead of March 15th being the start of that period, now we have October 15th. So we have till April 10th of 2026 to fund. It's a really weird situation, but you can fund your Oz fund and defer a 2024 gain, even though you're funding your Oz fund after filing your 2024 tax return on October 15th. So
crazy. It's a wacky result, isn't it?
Right. And in fact, and so what you have to do, you're going to have to guess, or work with your CPA, tax preparer, and tell them, hey, I'm confident I'm going to put in, $2 million of my gain or $3 million, whatever it is. And then if you, put in a different dollar amount in, you're going to have to amend the return. But this just kind of refreshes old gains. And it's not, as we'll get to on a later slide, don't advance yet, Ashley, but there's a bunch of other presidential disasters that also extended for different dates.
So Blake, this is kind of funny, and where this comes from, and I want to highlight this, is that I very much appreciate your slides. This is my standard one that I use inside of our mastermind, right? And this comes from like the timelines on K-1 reported gain, because just to go out there and to point this out for everybody, what we're talking about here is that if you get your gain through a K-1 or through an S Corp or a partnership that was reported on a K-1, you have three options about when you can start, or when you have to start your 180 days. Those three options are the date of the gain, the entity's fiscal year, or the entity's tax return due date, right? And so what Blake's talking about is that effectively what they did was they moved the entity's tax return due date, correct?
Yep.
Yeah.
Yeah. And so, again, this is, a huge game changer. If you're a CPA or know somebody that has a big 2024 K-1 gain, let them know they can still shelter all or a piece of that gain. And so then the funding period will now run from October 2025 through April 10th of 2026. And let's see here. What do I have here? Yeah.
So get the next slide.
Yeah. So the green piece was what the original due dates would have been.
Yep.
And now we have this extension. So you can advance.
Well, it was interesting too, right? How it ended. So the part 15th fell on, I think, on a Saturday, or maybe, I think it was a Saturday, which pushed the partnership tax filing date to 3/17, which resulted in an anomaly of pushing it to September 12th, when is usually September the 10th, based upon it in most years. So, kind of an interesting deal about how it all happened. So,
right.
Right.
And then this is outside, outside the 10 Oz arena, but obviously all of us run into 1031 structuring in our practices. So I thought I would add this in. So the presidential disaster, this is normal with all presidential disasters, is they extend the 1031 identification and replacement period. So for the California wildfires, that pushed it out. Instead of having a strict 45 days from the time you sold your old property, that also gets pushed out. The start is it's either the later of October 15th, which is coming up, or 120 days after the original 180-day deadline, which for the wildfires, you're better off using October 15th. But when we get to
that's crazy, because I mean that, like within the 1031 rule, because those dates are so hard and fast, being able to get an extension like that on that is amazing.
Right. And then to close, the down leg of the 1031, they extended that to the later of October 15th, or 120 days after your original 180 days would have run. So again, you get another half year in most cases. So pretty beneficial.
What's interesting about that is that if they were in an exchange, but then for whatever reason they missed these deadlines, they can then start their 180 days when they get the proceeds back from the QI relative to the OZ world.
Right. And so a lot of people have arguments on this with tax attorneys over the years, but they most people think that you go back, your gain is recognized on your original sale date before you went into the 1031 transaction. But as Ashley is saying, if you straddled a tax year, your 2024 1031 transaction becomes a 2025 taxable gain, even if you didn't do a 1031. And then you could also, if it was on a K-1, it opens up the possibility of having Oz be, your lifeline to continuing to defer it.
Sure. So, all right. So
we can go to the next.
Okay, this section, I'll maybe we hit this question before we roll on to the next one. What kind of documentation forms do they need in order to qualify for this?
Yeah, thank you for asking the question, John, because I failed to mention the way that you fall under the wildfire exemption, and I can't tell you this applies to every presidential disaster, but I believe it's the case. You can either live in the county. That was a county wide disaster, you can either live in that county, your primary place of work could be in that, or your financial records could be maintained in that location. So if your tax CPA or your other financial advisors are located in LA County, even though you may be in Arizona, you could still qualify for the extension. Okay. So to answer your question, John, you don't need to do anything other than disclose that you're a wildfire victim on the face of your return. If you are relying on the fact that your financial records are maintained in LA County in the wildfire situation, then you actually have to call the IRS and
That's
give
always
them
fun.
give them the entities that are involved in their federal ID numbers, and then they'll be on record. You still want to disclose it on that return, but that way they'll match it up because otherwise they don't have they don't have anything in their file to know that you're a victim, and you don't have to have been directly impacted. You could have been 50 miles away from the fires. Just the fact that you were in LA County, you're okay, or your CPA was in there. So
I got another question. This is actually a follow-on to the 1031 one. Tony, thanks for watching. Thanks for being here today. So if someone's 1031 doesn't work out, they could then roll that into a QOF. Is that correct?
Absolutely. Absolutely.
And your 180 days to get it into the QOF starts when you get the money back from the QI. Because you don't, it's by putting it in with a qualified intermediary, you have not, it's effectively, what do they call it? I think that it's not constructive receipt.
Constructive receipt, yeah.
Yeah.
Now the one caution is that I do worry in a situation where you didn't even get to the point of identifying replacement property.
Yeah.
I wouldn't want to go in and argue with the IRS that it didn't blow up earlier, but I agree with you. I think 95% I feel it's when you get your cash back, but I would worry that if you technically blew it up because you didn't even identify by the 45th day, I wouldn't want to argue with that with the IRS.
Yeah, you should probably just go ahead and have that from 180 days from the date of the sale.
Yeah.
Yep. All right, I'm going to pull your stuff back up. Let's get rid of that. Let's get back this, and then let's go on to the next one. So these are the other federally declared disasters, and man, we had a bunch of them.
Yeah, and so, but if anybody would like it, it's not online, but we have prepared a disaster tax guide for the wildfires, but it applies to other disasters. And so if you're interested in that, just ping me and we'll send you a copy. But yeah, there's a lot of disasters, hurricanes Helene and Milton. So you have a little bit more time, a couple more weeks, October 27th, 2025. North Carolinians, March 23rd. That's you, Ashley. You got all the time in the world.
I tell you what, man, it's insane, right? Like, and so when, when I looked at what happened with 2023 because of these, I mean, like I was filing my 2023 taxes, like a couple of months ago. So it's, the other problem is that it makes it so that you're, sometimes your professionals aren't necessarily, they're like, oh, well, we got an extension on this, so let's wait. And, so I've got to have my taxes done for the FAFSA. I got a kid going to college. And, but yeah, it's nice having the extra time, but sometimes you want to try to make it happen ahead of that. But inside of that, it does push off, particularly, right, as we're talking about these 180-day deadlines, right? Like now we're talking about March 23rd for somebody that's a North Carolina resident, that if they have a K-1 gain, they can roll from 2024. They've got till March 23rd, 2026 to get it into a QOF. That's nuts.
Right. And I just got an email from one of my partners this morning. They said, "Oh, how do I fill out the 8997 for the date that I made the investment?" And I just told them to put 10/15/2025 in there for the moment, disclose on that form that you're, in our case, a wildfire victim. And then when we file the 2025 8997, we'll know the precise date and we'll fix it. But I think that's my solution for the fact that you won't even have funded. Most people won't even have funded your QAF by the time you're filing your 2024 return.
Yeah, it's fascinating. Well, good techniques there too. So if anybody's got specific questions, and we're gonna have Blake's contact information here at the end, but if anybody needs to follow up on that, Blake's available. We've got his contact information to get you plugged in with him. All right, so so we got Alabama, Florida, Georgia, North Carolina, South Carolina, Tennessee, and Virginia. That's now pushed out till October 27th. And I thought that Tennessee maybe even had some additional stuff. Yeah, it's the early 2025 severe storms, right? Like that's actually gotten you to where now that's November 3rd, which then pushes it out to May 1st of next year.
Yep.
Once again, oh wow, it's crazy.
Yeah. So always look at these these disasters because they can really benefit your clients. But it does compress your filing deadlines because everybody waits till the last minute. So we're real busy for October.
All right, so here's Blake's contact info as promised, along with some of his other cohorts. And
so I just want to say I'm not a one-man team. So if you can't get a hold of me, I've got a very, very strong team. All these people can answer 95% of your questions, and 5% may have to filter up to me. And we've got several staff under these people too. So let us know. And then I've got links for our website as well as various tax alerts that all this information that we just discussed is on there.
Perfect. And anybody wants these slides, we're just let us know. Reach out to us at ozpros.com. Click on the informational link, and we can get these out to you. All right. So Blake, thank you for putting this together. Once again, I love your slides. Love everything that you're doing. Appreciate it very much. Any kind of final thoughts?
I just want to thank you. From like you said, 2018 on. You've been a great sounding board and a leader in the Oz world and spreading the word. So you're like Johnny Appleseed in the Oz world. So thanks for all you do.
Yeah, appreciate it. We're certainly trying to get the word out, right? Like I think that this is the greatest tax incentive ever legislatively created. And I think that, with the recent legislation to make it permanent, got even better. And really, really excited about what's going to happen within the rural zones and that kind of thing. And so super excited about the future and what we've got coming down the pike with OZs. If you've got any questions, you want to kind of get your OZ journey started, that's what we do at OZ Pros. We set up captive opportunity funds and opportunity zone businesses for folks. I think we're over 2,000 at this point in time. And we're here. We've got, like I said, we've got our Ascent call that happens every Tuesday from 10 to 11:30. If you're interested in joining that, you want to take it for a test ride, we've got a special offer going down where we will give you a free month. We'd love to have you in there. We'd love to get your questions answered and to get you involved in the OZ Pros team. If you've got, sexy, sophisticated stuff that's a huge fund or specific questions relative to this, Blake Christian is your guy. And he's helped a bunch of my clients with, some of the stuff that, is specific to either their industry or nuanced type stuff. And Blake, as always, it's great having you on. Great to have you as a resource. Thank you again for being here today.
Thank you, Ashley.
Yeah, absolutely. All right, guys, go to ozpros.com. Get your contact information in there, and we'll outreach and let us know if you can join us for Ascent. Put it on your calendar next Tuesday, 10 o'clock Eastern. We'll see you there. Cheers.